Yo, what's up guys? Aiden here. So today in this video, I'm going to show you how I made $3,000 trading stocks. It was actually, I think, 2,750, I think it was. But 3,000 sound better for the thumbnail, so I went with that, but I do apologize. So anybody who's been following my channel will know that one of my favorite setups is first green day bounce, some people call it. And if you don't know what that is, please first go and watch the video linked in the description below. And let's jump straight into it. So the ticker I traded today was AREB, AREB. Now we can see here, this was there's so many different patterns going on here, guys. This was a reverse split pump from around $1 all the way up to $20. So, you know, close to a 2,000% run there on big volume. So that's definitely a hot ticker in play. So first of all, we had the reverse split pump, but we also had a third day surge, which is this day here, and obviously the day one, first red day, and then third day surge slash breakout, then first red day, and then first green day. So this is the day today that I've traded it. And yeah, so this kind of, there's quite a lot to dissect here, but the reason that I took this today was this was so hot, you know, during this run up. So I kind of felt like it would have a bounce in it, even though it's technically already had a first green day bounce, and that kind of makes me a little bit more cautious. And the first green day bounce was this day here, which turned into third day surge, which turned into a breakout. But that being said, if we look at ICCT, which was another very hot stock in the stock market, this actually had, so this is its run up here, its first red day, first green day bounce, which broke out and then had a retracement, and then it did have a significant a second first green day on this day. So that kind of gave me a bit more conviction that AREB could do it as well. Otherwise, yeah, the more first green days it's had, the less likely I am to be interested in it, really. So if this was now to, let's say, have another red day, another red day, another red day, I really would be hesitant about taking a first green day bounce on that day, really. It's kind of done what I've expected it to do already. So if we jump to the 2-minute chart on the intraday, I don't know if we can fit it on actually. Let's do the 5-minute chart. Okay, now this is the first green day, first red day, third day surge breakout, first red day, and then the retracement. Now, I did actually trade it on, let me show you, on this day here, looking for a first green day, because this is a significant drop. This is 45% from the previous close. So I did think that it might have a bounce here if it goes green. So what I saw was that, which day is it? It's this day here. It was holding red green. So I just kind of took a position here, and I was really quite conservative. I took really small size and really conservative and just sold it up here. Just made I think like $200. I was just really conservative on this one. But I don't like it generally when these stocks try to have first green days and then can't. The more times it does that, the less likely I am to look for it to have another first green day. It kind of ruins the sentiment of the stock and the possibility, in my opinion, that it's going to have a good first green day. However, this one kind of made an exception to me, and the reasons for that, firstly, like I've mentioned before, yeah, it was so hot. It was so hot. This really was a hot stock. This now down from 20 all the way down to 5. It's massive retracement off its highs. I thought it is worth one more shot. But the thing that gave me most conviction was this trend line, guys. This trend line here is held one. If you look on the minute chart, it's even cleaner, I think. Look, 1, 2, 3, 4 days it's been holding that trend. And so to me, you know, combining that tre- break of trend with a hot stock, having retraced off its highs for multiple red days, it's definitely, in my opinion, worth a shot. So this trend break was really, really key for me. And I drew these lines on before. This was the risk, my risk level. I wanted to get as close to this 540, 550, 60 area as I possibly could. And these were my profit targets, really, based on various levels on the chart. This was my ultimate profit target, which it did hit, and I had no shares left for it because I started looking at my P&L and being like, whoa, I'm not almost $3,000 here. I was like, so I'm a little bit gutted. I could have just left 100 shares on. Do you know what I mean? That's what I really would like to get in the habit of doing. And so often when I draw on these lines, that they work perfectly, as these have really. So you can see here, it's almost topped out perfectly there. This is kind of just like I sold my first piece at like 780, I think. This was just kind of to just lock a little bit on in case it goes against me. At least I've secured something. So you can see here it's sort of bouncing around this area here. So yeah, this break of trend was key. Now, in an ideal world, I wanted this. If it came down here, I was really going to load up, but it didn't. It kind of had a drop here, and I could just see it's that's probably the bottom. So what's happened here is, because this, rather than coming down, and I didn't consider this beforehand, but I've seen it enough times that I should have. Rather than coming down and retesting this, this support is based on this low of this day, and then it's held again here and then held after hours. Rather than coming down and test this, what it's used is this trend line, because this trend line is the thing that's been holding for so long. And so what it's done in the morning, it's come down, it's gone, yep, this trend line, which was previously resistance, is now support. I'm using that and popping. I didn't kind of register that at the time. In my mind, I was just thinking, I hope it comes down to this area, as close to my ultimate risk level as I could possibly ask for. When it didn't, I could just see it was holding on level 2, and I would just market it in. I think I got an average. I got E-Trade was messing me about, and so was scans with the level 2, and so I had an average of about 600. And then when I saw it push, I marketed it again, and my average ended up at 620. But I didn't get the size that I wanted. I really had a lot of conviction in this trade, again, for all the reasons I've given, especially that trend line. That's like, this is a layup. This is an absolute layup, in my opinion. The risk was a little bit wider than I would have liked, because there's a good sort of 10-15% there, including slippage, so much wider than I would have liked, and the reason why I didn't take as much size as I initially had planned to do. So yeah, just sold all along the way. The best sell was 990, because I started fearing how it's going to react to 10, and then missed it, reaching my ultimate profit target. So there was a good, almost more or less exactly 100% from my entry. I took more or less 50%, but that's cool. I am pretty happy with that. 2,750 is my best day in a before in a few years, basically, since I've been rebuilding my account. So yeah, very happy with that. I hope there is some value in this for you, and that I'm not gone over it too quickly, because it's just so obvious to me. I'm not sure if I'm if I'm missing anything that needs to be broken down more. So if you do have questions, put them in the comments, and I will get back to you. Yeah. All right. Cool. Cheers, guys. See you on the next one. Bye bye.